busy business owners, entrepreneurs. We see you working extremely hard trying to close those sales for the last month of the year, working really hard, going strong to finish out quarter 4. We see you working extremely hard, and we want to help you save that hard-earned money that you're working for and pay less in tax. I got Maddie Brown, CPA and founder of Smashing Numbers, here with us today. Say hi, Maddie.
Hey.
We also got Christine LeClaire with us today. She is a tax expert on our team. Go ahead and say hi, Christine.
Hi.
All right, so why don't we go ahead and get started? Christine, why don't you tell us what is the one way that they can save money in taxes?
I would say the number one is contributing to an HSA, which I believe is what Maddie's going to talk about today. So.
Awesome. Maddie, why don't you lead us into that conversation?
That is high on the list of things you can do. If you have a qualifying high deductible health insurance plan, which most Americans do, you have the opportunity to contribute to something called a health savings account. Now, I kind of am on a soapbox about health savings accounts right now because they are the trifecta. It is perfection. You get a deduction for what you contribute into the health savings account. You can save it indefinitely going forward, and the earnings on that health savings account are not taxed. You get a tax deduction when you put the money in, and if you keep track of your medical expenses, at some point far, far, far in the future, you can withdraw the money and reimburse yourself for the medical expenses that you incurred in 2023, 2024, and on. And as long as you're reimbursing yourself for qualified medical expenses, the money comes out tax-free. It's true. You get a tax deduction when you put the money in. You don't pay any tax on the dividends and interest that the money earns. And when you take it out of the HSA for medical purposes, you don't pay tax on it. Now, there's an interesting array of things that qualify as medical deductions, like Tylenol and NyQuil and ibuprofen and all sorts of things that you buy for medical care are HSA approved. So you save your receipts, you leave the money in there, and at some point in the future, you reimburse yourself those expenses, and you have tax-free money. I've been in this business 40 plus years. This is the best thing I've ever seen. Tax-free, all fronts, perfection. You need to open an HSA account today. I don't care if you put $10 in it, but when you put the first money in it, you start the clock running on all your medical expenses. Take pictures of your medical receipts, save them in a file on some cloud storage, Google or Dropbox or whatever. And someday you'll need that money and you'll be able to take it out tax-free because you've saved your receipts and you've had the money. Now, most of America doesn't itemize deductions anymore because the standard deduction is higher than what most people incur expenses for. And medical expenses, you have to have greater than 7.5% of your adjusted gross income. So most people never get a medical deduction. So that's why this health savings account is so significant, because it gives you, oh, Christine, double check my amounts. I need help. For single is how much, and how much for married family plan?
It's 3,850 for single and 7,750 for family coverage.
Now you have until April 15th to put that money in there. So if you save $20 a day, if you save $25 a day, you can be pretty close to having that maximum single contribution in there, because it's has to be deposited by April 15th. Now, people ask me all the time how to save on taxes. They want to know how they can pay less tax. How can they pay less tax? I'm telling you, an HSA, number one tool, use it. Number two, maximize your retirement savings account, your 401k. If your employer gives you a match, you're a fool to not put in what your employer matches. It's free money. That money can't come out until you're 59 and a half, and it is subject to tax when it comes out. So it's not as good as an HSA, but it's still the second best way to save on taxes. And the third best way to save on taxes is an interesting dilemma. If you omit $100 tax deduction on your business return, you are literally throwing away $30 worth of taxes, give or take. So you need to make certain that you're capturing all of your expenses. Now, I can't remember what I did yesterday, let alone what I did a year ago. So what I did in January 2023 is totally obliterated, all right? If I didn't have records that kept track on an ongoing basis, I wouldn't have a clue what the hell happened in January of 2023. You need records, accounting records of some kind. You need a mileage log. If you drive 100 miles, what's the mileage rate for 2023, Christine? It changes, so we always have to be current.
65.5 cents.
65.5 cents a mile. What that means is if you drive 100 miles, you've got a $65 deduction. A $65 deduction at 30% is roughly 20 bucks. So if you drive 100 miles, it's worth $65 in deductions, $20 in taxes. And if you just forget about a single trip that you drove 100 miles, you've thrown that money away. It's like lighting a match to it. Not having good records, mileage records for your vehicle and business expense records for your business, is the number one thing you can do to make sure that you don't pay taxes other than what you are required to. Now, there's a contradiction between paying taxes and making money. Lots of people don't want to pay taxes, but they want to make lots of money. You make lots of money, you're going to pay taxes. But you don't want to pay any more than you absolutely have to. But it is a cause for celebration if you owe taxes. The vast majority of small businesses in this country generate under $100,000 worth of profit, under $100,000 worth of revenue for that matter. And so when you look at small business, if you could make $20 an hour as an assistant manager at McDonald's, you'd have a lot less stress and a lot less headaches than you do running your own business. So I want you to be profitable. I want you to make money and make good financial decisions, which is another reason for your accounting records. And I want you to capture all your expenses so you don't pay what you have. Now, Christine will tell you, I think, that one of the most challenging things during tax season is getting records from clients. And every year we have people say, I didn't make that much. Where did it go? I don't have that much money. And then they'll think about it a day or two or a week or so, and they'll find more expenses. Have you ever had that happen, Christine?
Mm-hmm. I have.
Okay. Find them before you take them to the person who's preparing your tax return. That's my advice. Okay. It just makes the person doing your tax returns life more difficult and more challenging, and it takes more time for them to do what is right, and they cannot deduct things that you don't tell them about because they're not mind readers. And if you don't remember what happened in January, they certainly don't know what happened in January. So that's my rant of the day. A, get a health savings account provided you qualify for it. B, maximize your retirement plan. You want to know what the rich and wealthy do? Those are two things that they will never miss doing. The second thing they'll never miss is having records that substantiate all of their expenses. And they may be a little aggressive on those expenses. And your accountant's job, I always tell people, your accountant's job is to tell you that the speed limit is 55 miles an hour. This is what you can do. This is what's deductible. This is what is legal. That is your accountant's job, is to tell you what the speed limit is. Now, I've known clients to want to drive more than the speed limit. And I always want to have what I call a defendable position. I want to be able to sit down across the desk from the IRS and say, this is what I did and why I did it. And I count it as a business expense because of this. If I can't do that in good conscience, it doesn't belong on your tax return. Because then I'd say you're operating in the range of 70 or 80 miles an hour. And I'm not getting in the car with you. Okay? Because the speed limit is 55. And that's where I'm legally obligated to tell you to stay. Now, I'll be truthful. I'll take I'll take a position that is a little aggressive from here and now. But if you're going to do 70 or 80, I'm not getting in the car with you. And nor will any good CPA or accountant or tax preparer. I went way off of base, didn't I, Becca? What?
You're all good. I love the speed limit say. That is always my favorite of yours. And it's very true. And it just shows who we are, Maddie, and that's who we are. And I want to recap a couple things that you said, Maddie. So on a health savings account, if a single entrepreneur made $45,000 and they put in the maximum contribution of $3,850, they are only going to get taxed on 41,150. They're not going to get taxed on 45,000. That can be enough to put them in the next lower tax bracket, correct?
Yes.
That's awesome. That sounds like a tremendous way to save money, especially if it could lower you in the next tax bracket. So let's do another scenario here, Maddie. So if a single entrepreneur made $100,000 this year and they put the max contribution in their health savings account of 3,850 and they put the max contribution into the IRA of 6,500, instead of getting taxed on $100,000, they're now only going to pay tax on $89,650. That's a huge difference.
And the younger you are, you know, I've earned my gray hair over the last 40 years, okay? And I've turned into an old woman at some point, and I will say, you youngsters should be setting aside $100 a month minimum and saving it forever, because then when you are 65, you will have money. Okay? You can save $100 today. You can invest it in Acorns, you can invest it in Robinhood, you can put it in a savings account. The sooner you start an HSA account, the better. But that money is going to be there for you, and you have the age working on your side. If you invest $1,000 today and you earn 5% on it, at the end of the year, it'll be $1,050. And next year, it'll be $1,100. And the year after that, it'll be $1,200. And the money compounds and it earns interest on itself. And so you have the added variable that I don't have at this point of time working on your side. So your money compounds on itself and grows itself. Now, there's all kinds of ways to invest your money, and the sooner you start investing and you learn about investing, now you can invest in certificates of deposit, you can invest in stocks, you can invest in money markets, you can invest in real estate, you can invest in rocks, you can invest in antiques, you can invest in your business. All of those investments, including the investments in your business, should be giving you a return on the investment. And that return on your investment needs to run between 5 and 10% every year. And if you start now, you will have something that most people at age 65 don't have. So start now. Even $10 a week adds up fast.
And the good news is they can make a difference on their 2023 income and taxes now.
Yes.
So even if they were to start saving $27 a day from right now till April 15th, that would be $3,483. Don't ask me why I came up with $27 a day. It seems like a attainable amount. It seems like a doable amount. So if you were to contribute $27 a day till April 15th, you could put $3,483 aside, and they actually have till April 15th to put money in an IRA for the 2023 tax year. Correct, Maddie?
Correct.
And
And
that can be enough to lower their tax bracket instead of being at that next tax bracket. So that's a tremendous savings.
The reality is a $3,483 deduction is going to save most Americans. Add just a second. I'm going to do math. I hate to do math. I'll tell you what CPA stands for. It stands for can't possibly add. So I'm going to get my handy dandy computer calculator, and I am going to calculate for the average American, if they deposit $3,483 into an HSA account, it will save them $522 in taxes.
That's a good
That's
savings.
That's how you save money on your taxes.
Absolutely. And I want to also recap on the bookkeeping one, Maddie. So if they were to not have good record keeping system or not keeping track of their expenses, and they miss $1,000 worth of expenses, like a receipt that they bought a printer for $1,000. If they miss receipts equaling $1,000, they just paid $300 in taxes that they didn't need to. Had they kept those receipts and had bookkeeping or a good record keeping system, that's $300 they would not have to pay in taxes because they have that $1,000 in expenses.
And that $300 is gone forever. Forever. It's gone. Gone money. It's not money in an IRA that you're going to be able to take out later. It's not money in an HSA that you're going to be able to take out later. It's just donated to the IRS. Now, I've got lots of things I like to donate to, and I will tell you that the IRS is at the bottom of the list.
Absolutely. All right, Maddie, is there anything else that you would like to add here on the tax part before I invite them to our fun at the end of the month?
Well, I just want people to know, there's this mentality that rich people don't pay enough in taxes and poor people get paid too much in taxes. And there are fundamental things that wealthy people do to avoid tax. Maximizing their retirement accounts, making use of the deductions that they have available. Nothing magical about that, nothing wrong with that, and it's available to every single tax-paying American. You don't use it, don't blame someone else. Look in the mirror.
Love that. And Christine, did you want to talk about them working with us on tax returns, how easy our process is to get started, or did you want me to cover that real quick?
You can cover that. It's no problem.
Okay, so if you were to want us to do your tax return, you go to smashingnumbers.com and book a free strategy session. It's super simple. To work with us for doing a new tax return, we would send you what we call as an organizer. It's just a series of about 20 questions, such as like, did you have crypto? Did you have a W-2 this year? If you say yes, you can upload your W-2 right there. Super easy friendly, user friendly. We would need a copy of your 2022 tax return. And we use that so that we don't miss anything. We can see what you had in 2022. And if something's different this year, we'll ask you if something changed. If it did, great. It don't need to be on your tax return. But if we see something that was there last year that's not this year, then we know we need to ask you for more information. And so you can either upload all the documents at the end of our organizer or as you go. It's super user friendly. And we have an amazing team that works together. So if you have any questions about taxes or any questions going forward, comment in the comments. But before you leave, we want to invite you to join Maddie and I Saturday, December 30th at 10 a.m. Central Time, 11 a.m. Eastern Time for a Master Your Finances workshop. It's going to be a lot of fun. We're going to set some goals. We're going to empower you with financial clarity. We're going to unlock financial confidence and transform your business. And I want to tell you right now that the first assignment or the first piece of homework we're going to give that day is to create a list of 100 things to do, to be, or to have. Now that sounds a little funny coming from an accountant's office. And when we're talking about unlocking financial confidence and financial clarity, but that is the biggest piece of the puzzle to start us off, is to create a list of 100 things you want to do, to be, or to have. Maddie and Christine, is there anything that you want to add other than Maddie? I hope you tell them that they want to come have fun with us on December 30th at 10 a.m. Central Time, and the link to sign up to that will be in the comments. But is there anything you want to add, Maddie, or why the 100 things?
What I want people to know is if you have a clear idea of what you want in your future, you're far more likely to attain it. And if you write it down and say, this is what I want to do, be, and have, then you can set goals and you can make decisions. And I hear so many people say, one of my pet peeves is somebody that says, well, I can't afford to do that. And my first question to them is, well, how much does it cost? And the simple truth is 90% of the time, they don't know how much it costs. They can't answer the question. If you don't know how much it costs, you don't know if you can afford it or not. If you don't know how much money you make, you don't know if you can afford it or not. And so it is a lie to say, I can't afford that, because you don't make that statement from a standpoint of facts. So first you got to know what you want. Is it a new car? Is it new carpet? Is it an addition on your house? Is it a puppy? Is it always, puppies are good. I like puppies. Puppies are always a plus. Okay. You can never go wrong with a puppy. Well, no, yes, you can. Puppies are for life. Puppies are for 10, 15 years. And so you better, or you better want a puppy, okay? Because it's life-changing to get an animal. But I don't care if you want to play golf in Florida. I don't care if you want to climb Mount McKinley. I don't care if you want to drive a BMW. I don't, it doesn't matter. You can have any of those things. You have to know how much they cost. You have to know how much you make. And you have to be the master of your own ship.
And I know we lecture all the time in a nice way to separate your business and personal expenses. Keep them very separate. If you go to Walmart and you have two items, one for personal and one for business, get out your business card, use it for the business item, get out your personal card, use it for the personal item. But the only time that we do want your business and personal life to intertwine is we want your business to support itself and your personal life. And so I love our holistic approach, Maddie. I love that it's not just, like, oh, what do you want? Do you want that car? It's also, what do they want in their health? What do they want in their lifestyle? What do they want in their personal life? And we'll dig more into that. And I promise it's fun, it's inspiring, it's empowering. But the first thing is to create that list of 100 things to do, be, or have.
Exactly.
So I hope that everybody joins us on December 30th. You are invited to Master Your Finances workshop, December 30th, 10 a.m. Central Time, 11 a.m. Eastern Time. And we are going to empower you with financial clarity. We're going to make it fun. We're going to hold your hand. And if you have any questions, we're here for you. So is there anything that you guys want to add before we say goodbye?
2 hours on a Saturday morning to set yourself up for 2024.
Love it. Love it. And the other thing I just want to add when we're talking about fun and what it's going to be like in 2024 is that we're also not going to have them budget. We actually don't believe in budgeting. It is a better use of their time to generate one more client than it is to figure out what expenses they can cut. And so I love the abundance mindset approach that you have taught over the years, Maddie. And I think that's the fun and inspiring part of it. So we will dream big. We'll figure out what you really want and how your business can support that in 2024.
Exactly.
It's going to be so much fun.
Okay.
Okay. Well, you guys have a great day. Business owners, entrepreneurs out there, stay busy, stay focused, but please join us on Saturday, December 30th. Talk to you all later. Bye.
Thanks. Bye.
Bye.